recording. Go ahead and type in the chat room. What was the one question that your group came up with? Okay, I'm seeing what is the best place to learn about investing? Whom do you trust? How do you know which stocks to buy? How do you start investing in the S&P 500? How many years of performance record is good for us to analyze the capacity of the investment manager? Man, good question. All right, well, that's 4 questions from 4 groups. I don't know if there's some duplicates within that. If there are other questions that you have, you can just put it in the chat room. So let's see. Obviously, I'm not prepared to answer all those questions today, but I will take them down. But here are the questions we are going to answer today. 1, what is the fluctuation of investing in stocks? How does that compare to investing in other investments? How do you read a stock chart? How do you know which stocks to pick? Which I think is a question that Zing is asking, excuse me. And the other one is, how do you know that the data on the company is reliable? So and another question just said, what's the minimum amount of money typically needed to consult a broker when researching stock? Oh, I love those questions. All right, so let's get into what does investing in stocks look like as compared to investing in other things, right? So oh, okay, I know what's going on here. So this is the investing in the S&P. So this is investing in stocks, right? And so I've said this multiple times, mostly in passing though, but what the S&P 500 is, the Standard & Poor's 500 represents the 500 largest companies. So when you think about investing in the stock market, this gives you a barometer of how the stock market is doing. It's how the 500 largest companies in the United States are doing, right? So you can see there, by investing in the S&P, and this is over a 10-year period, going up to 2013, you would have earned 7.4%. Versus if you were investing in international stocks, it would be 6.9. Versus investing in bonds, which we talked about last week, 4.6. And then you get into more municipal government type bonds, 4.3. Fixed investments, this is more like your money market funds and kind of a mixture of CDs and things like that, 2.6%. Real estate down to 1%. Commodities, investing in gold and pork bellies and stuff like that. So you can see that of all the investments, right, investing in stocks over a long period of time results in the highest level of returns. Okay? And I forgot what this purple thing was, but I took this chart from a investment manager's website. And of course, the 7.6% was the investment manager saying, if you invested with me, you would have done better than all these things, right? And so didn't think that was, I'm not giving any free advertising. But this is what I think is important, right? So this is comparing, this is a look at what that 7.4% looks like over that same period of time. So in order to get 7.4%, right, if you started here with 1,000, you can see how it goes up and up and up and up and up, and then it drops, right? 2008, in 2008, 2009 takes these drops, and then it starts to go up, and then it drops again, and then it goes up, and it drops again, right? So in order, I share that with you so that you know, in order to earn this 7.4%, right, from here to here, you've got to ride this roller coaster, right? So investments are a lot more. Okay? When we compare it to bonds and we compare it to real estate. So on this side, you can see this is the S&P 500, right? This is going from 07 to about 2018. And you can see the ups and the downs versus the housing market, right? Which it's gone down and then it goes up, right? So you're still seeing an increase, but that increase is much more stable, right? So when you think about how you want to invest and what your appetite is for risk, right? And thinking about long term, this housing market, the real estate market, is a lot more consistent than what you'd see in the stock market. Similarly, when you look at bonds, you can see the bonds in the blue. These numbers are just a little more closer. You'll see that there's ups and downs, and but you're not seeing the huge swings like you're seeing here. So what questions do you have about those last two slides?
Can you go back to the prior slide?
This one?
No, sorry, the one right after that. I thought there was one in between. Yes.
This one here.
What is the St. Louis adjusted monetary base? What is that? What's a black line?
So the black line here, again, this is just coming from a specific website that was talking about this as a investment tool, and so it's kind of like a mutual fund.
Gotcha.
So it's showing you kind of how they compared to the S&P 500. Mm-hmm. So I had a hard time on this slide this morning trying to find something that was consistent, because here's how data works, right? If I want you to let me be your investment manager, I'm going to find a time period, and I'm going to find a fund that has beaten the S&P 500. And so I was having a hard time finding something that was consistent or reliable. Or here, right, if I want you to invest in my fund versus the housing market, I'm going to be strategic in terms of what I consider the housing market to be. It could just be referring to the Bay Area housing market, or just the Atlanta housing market, or the net, right? We can always play with numbers. And so I do want to thank you, because I did want to point that out, that you can go and look at a lot of different ways to slice and dice this data. But the real takeaway here is that bonds move very consistent, okay? And the housing market moves up, but it moves very slowly. It's more of a stable investment. Whereas when you're investing in stocks, you have to be willing to take the dips and the rises. Other questions? So before I show you how to read a stock chart, I want to make sure we're all on the same page on what this term volatility means. Now, many of you have heard the word volatile, right? We're looking at this basketball coach who appears to be volatile. So what volatile or volatility means in the English language is a liability to change rapidly or unpredictably, okay? And especially for the worse. So someone's volatile, they're just all of a sudden they're just changing in their attitude and their demeanor. Think about it, a lot of terms in attitude. For stocks, what they're looking at is the degree of the variation of what their trading prices has been in the past. Okay. So volatility is saying what's the susceptibility, what's the likelihood that this individual stock that you're investing in is going to have rapid changes, either positively or negatively. So volatility does not necessarily have to be a good thing. I mean, is not necessarily a bad thing. Okay? It's just saying, because it could change rapidly for the better, and it could change rapidly for the worse. But what it's telling you is, the more volatile your stock is, the more willing you have to be to go on this wave of ups and downs, ups and downs. Does that make sense? Are there questions? All right, so how to read a stock chart. So let me, I'm gonna pause this share. I'm gonna pause this. I'm gonna stop this. And I want to go to me being old. I don't know, and I'm older than a lot of y'all. So when I learned how to like deal with stocks, and I always went to Yahoo Finance. So you all can see my screen here, Yahoo Finance. Now I'm sure Google Finance is a thing, or you can always go to E-Trade or Vanguard. There's lots of different places you can go to find this information. I just personally go to Yahoo Finance, but it's giving you the same information. And so if all we have to do is type in a company. So I was thinking which company, and let's do Clorox. Okay. So the first thing, so you just type Clorox here in the search, and it tells me. So here's information on Clorox. So when if you go, so here's why I chose Clorox, right? Because I was watching TV yesterday, and there was a lot
Lord.
I saw a commercial about Clorox, and I was thinking, man, they must be doing well. And so I figured we'd start here. So Clorox company, first thing I want you to see is this right here, $188.99. That is the price of one share of Clorox stock. So if you said, I want to buy some shares in Clorox, and I wanted to buy 10 shares, I need my calculator. Each share is going to cost you $188.99 today. And so you would need $1,889.90 if you wanted to buy 10 shares of Clorox company.
Right.
People I want you to go ahead.
How many would people normally want to share? Like you said 10, but what's normally what maybe I would want to do that? I'd imagine just
I don't know what normal is. Yeah, I don't know what normal is. It's more than one, I would say.
Okay.
I think when you're making a stock investment, a lot of people make stock investments based off of the amount. So they'd say something like, I'm going to invest $5,000 in Clorox. So if you're investing, or let's say 1,000, you're investing $1,000 in Clorox, that's going to buy you, take 1,000 divided by 188.99. That's going to buy you 5 shares. So you're going to spend a little less than 1,000 to get 5 shares. So I want you to look here where it says the 52-week range. So we all know, we've all heard, if you're going to buy stocks, you want to buy low, sell high, right? But oh my God, that's so much easier said than done. But what this tells you is over the last 52 weeks, right? So from, y'all don't get me, from May of 2018 till of 2019 till April of 2020, about 52 weeks, the stock has fluctuated between $144.12 and $214.26. So you're not buying quite at the high over the last year, right? But you're not buying at the low over the last year either. So I think that's important when you think about, if I'm going to buy this stock, what am I buying at? Am I at the low point or am I at the high point? There's also, and then right here is the day range. So just today, right, it changed from 188.65 to 191.50. This red here, so the stock market hasn't closed yet, or has it? Yeah, it closed. It closed at 1 o'clock. So this red here says that today, this stock, Clorox, lost about 1%, 0.94%. It started, it opened at 191, and then it closed at 188.86. Here's the other thing that I think is important, is to look at volume. Okay? So this volume tells you, and this answers, I think that was Bryant that was asking the questions, how many stocks should you buy? Just today, there was 1.6 million shares that changed hands. And remember how the stock market works. So the stock market is just, it's like going to a flea market, and Clorox has got their table here, and people are walking up to the Clorox table, and it's not Clorox selling chairs. It's people going to the Clorox booth and someone saying, hey, and then someone comes up to that booth and says, yeah, I want to buy some Clorox shares. And then you all are negotiating and haggling a price that's going to make sense. Okay? That price started at 191. It ended at 188.86. Stock market, the way stock prices work, it's really your basic supply and demand. Okay? Today, there were more people willing to sell than there were people willing to buy. Okay? Because someone said, well, I want to sell it to you at 191.01, and someone else said, hey, I'll sell it to you for 190 because I'm just ready to sell this stock today. And someone said, oh, 190, I'll sell it for 189, right? And so they're bidding back and forth, 1.6 million. Okay, so on average, 2.5 million shares are being traded. Okay? So what that tells you is today is lower than their average volume. Questions?
What does the market cap part mean?
So the market cap is comparing the total number of shares that are outstanding. Okay, so those are shares that are held by shareholders, and multiplying that by the closing price.
Okay.
Of 188.86. Let's see, let me show you a couple other things on this page. I think, so historical data. If you click on this tab here, this gives you the closing price for the last year. Okay. And the volume on a daily basis, right? So you can look back and see on April 17th, it closed at 194, right? So when it was at so let's see, before the COVID-19 thing happened, it was trading at, what do you guys think COVID-19 was? Like mid-February? Let's go March 2nd, 163. And then now it's up to, I'm sorry, I was looking at the wrong column. March 2nd, you need to be in this column over here. 171, that's just the opening price. This probably was the day, yeah, one of these were the day COVID happened, right? Because look at the volume, 4.7, 3.7, much higher than their average, right? And then you can see, well, actually, I don't know why it started at 172, it dropped to 158, and then it rose from 163 up to 171. And now it's at 181. And it had its 7 right here, 7 million shares being traded. So we can go back and look at, if we wanted to, what happened on that specific day that caused everyone to dive into Clorox and want to buy Clorox on that day. Whereas today, not a lot really happening. Not a lot of activity for Clorox. I think this is important, the financials. We're sorry we're not finding anything on that page. Let me try and do a. Right here. Refresh. So I have so many things open. So this is showing you what their total revenue was, gross profit, total operating expenses. My accounting students in here, you should be eating this up, right? So this is the information, the financial information about this company on an annual basis. Okay? And you can see the income statement, right? There's the balance sheet. You see what their assets are, their liabilities, okay, who they owe, what type of assets they have, and statement of cash flow. And then here's something that I probably shouldn't tell you about, but I'm going to show it to you anyway. And that's here in conversations. So, and here's why I got to be careful what I'm getting ready to show you. These are people like you and I who are just talking about the stock. So Ed said yesterday, people will continue to use more Clorox product after coronavirus is over, just to be safe. I know we will, in my opinion. The thing's going to fly through earnings. No way it doesn't. It's true that Clorox doesn't only sell bleach, but let's get real here. They're working 24/7 instead of 12/6, right? So this is just people talking about Clorox. Okay, dude, he's really amazing. I'm hearing incredible things about him. So, and okay, this is the perfect example of why you have to be careful of the conversation thing, because sometimes what you have in there are people who have short sold the stock, and what they're trying to do is convince you to buy or sell, and they're, you know, kind of pretending to be just like a regular person, run into the Clorox table and say, I need to sell right now, or I need to buy right now. I find this really helpful in the context of the fraud work that I do. If I'm looking at a company and I'm trying to understand what happened to their stock, why it dropped significantly or shot up significantly, I like to go here just to get a sense of what people were saying at the time. Of course, all this is hindsight, right? As I'm looking at the information, looking at stuff from a year ago or 6 months ago. But I just find that to be interesting. Questions? Back to the summary page. So let me geek out for a second and show you some things that I think I probably should just, I'm going to explain them all first. Okay. There's a lady that just walked in my driveway and she's smelling our flowers. Oh, and now she's leaving. Okay. So I'm going to geek out a little bit and show you guys some, give you some technical terms. Okay. One is beta. Okay. So you want to look at a company's beta. Okay. What this is telling you is how volatile is this stock compared to the market in general. Okay. So when we think of the market in general, we're thinking of the S&P 500, right? So you're looking at how much is the S&P 500 fluctuating, okay, over a certain period of time, and how does that compare to how this particular stock is fluctuating? Because we may see, when we look at Clorox, right, we can see that it's been up, down, up, down, up, down, but so has the market's been up, down, right? So that doesn't necessarily mean that Clorox is a risky buy until we compare it to, well, is it moving at a rate much more or less than what the market's doing? Okay. So that's volatility. If it's less than one, your volatility, I mean your beta is less than one, that means it's moving at a slower pace than the market. Okay? It's more calmer than the market. If it's more than one, it's moving at a faster rate than the market. More volatile. It's more subject to rapid change than what you're seeing in the market. The other one, which many of you have maybe heard of, is called the price to earnings ratio. Okay, P to E, P to E, price to earnings ratio. And what they're doing there, and that TTM stands for trailing 12 months. Okay, so they're looking at, on average, how much is this company making, right, on a per share basis, and how does it compare to their current price? Now, this is an important metric to look at because it stabilizes companies. It's hard to compare Clorox to Tesla or Tesla to Nike because they're doing such drastically different things, right? Tesla has a huge profit margin per product they sell, right? Whereas Clorox has a much smaller product margin per product, but Clorox is selling way more than what Tesla is selling, right? So it's hard to make these comparisons, but this P to E ratio is going to kind of level that playing field because it's saying if you were an owner, based on their profits, this is how much money you would have made, right? And compare that to the price. On average, the S&P 500, on average, is between 13 and 15 times. Which means if you're buying a stock that's making $1 a share, on average, you should expect to pay $15 for that stock. Anything above 15, generally speaking, guys, anything expensive buy. Because now if it's making $1 a share and you're paying $20 for it, right? In theory, one way to think about it is it's going to take you 20 years in order to get your capital investment back. Anything less than 15 is considered a good deal because it's less than what the general market is accepting. I probably should have did this one before I did the other one. This is earnings earnings per share. What earnings per share, and again, my accounting students, you guys, I know you guys are all over this, kicking back, right? Tyler and Chantel, and you guys are like, oh, I know this stuff, man. Earnings per share is when you divide the total number, Jalen, Sam, total number of outstanding shares that the company has, right? Which shareholders own their shares, and dividing that by how much money did they make, how much profit did they make. Okay. So it's kind of like a hypothetical. It's saying, if we were to take all profits this year and just give it to all of our shareholders, this is how much money you would make for each share that you hold. Okay. That's the earnings per share. I should have did earnings per share before I did this one, because in order to calculate your price to earnings ratio, you need to know what your earnings per share is. Okay, this number here. And then the fourth one, which I think is important, is this metric of the forward dividend yield. Okay. So there's two ways that you make money in the stock market. Okay. One is I buy a stock for $188 and I hold it for 10 years, 5 years, okay? And then now the stock's worth $250. Okay? So I take that $188 stock that I bought, that asset, and I sell it for $250. I just made $62. Okay? I bought it for $250. I sold it for $250, bought it for $188. I just made $62. The other way that you make money is by buying that stock for $188, and then every year or multiple times a year, Clorox or that company is going to give you some dividends. They're going to say, this is how much money we made, and we're going to pay some of this money back to our owners. Okay. So that's what a dividend is. What this forward dividend yield is it's telling you, and forward looking, we're expecting to pay out this much in dividends over the next year. Okay? And so you can now start to project what your yield is. Remember, yield is your profit, how much you make from this investment. What your yield is going to be over the next year, and by investing in this stock, just from dividends, not from the stock market going up or down. All right, questions? So let's go back to Yahoo Finance and look at Clorox's beta, their P to E, their EPS, their yield. If you own some stock, right? If you own stock in a company, man, like, you should probably just be looking at your own company, the stock that you own right now. But so here's the beta, right? So you see your beta, and for Clorox, it's 0.17. Okay? So 0.17, right? Remember, 1 means it's moving at the same pace of the market. Okay? And more than 1 means it's moving higher than what the market's doing. It's fluctuating more. Okay? 0.17 means it's barely moving compared to the market. So the market's doing this, right? And Clorox is just doing this, okay? Barely moving. It's a relatively safe investment. Not moving a whole lot. And what you think about Clorox, right? Present time excluded, is just a stable product, right? I mean, I buy bleach when I run out of bleach, and I run out of bleach like, I don't know, 3-4 times a year. But you usually don't go to the store to buy bleach. You're like, I'm at the store buying these other things. By the way, I'll buy another jug of bleach. And I know they sell more than bleach. They sell Hidden Valley Ranch and dog food, Purina dog food, and all this other stuff too. P to E ratio. So their P to E ratio is 29.76. Remember, anything above 15 is considered high, right? So their P to E ratio is 29.76. That's a high ratio. But when you go back and if you own stock, or if you're interested in a specific company, you can type in their company name here and look at the P to E ratio for that company. What you're going to find is most companies right now are trading, because the market is due for a correction, right? That's what we've been saying, not we. That's what they've been saying for the past 3 or 4 years, right? That the market is due for a correction. The P to E ratios are just higher. The prices to buy everything is higher than what companies are actually earning. Their EPS over the last 12 months, TTM stands for trailing 12 months, $6.35. Again, what that's saying is if you were a shareholder, right, and you owned 1 share of Clorox stock, on average, based off if they took their profits and said we're just going to pay it to all of our shareholders, right, you would have received $6.35. And then here, the forward dividend and yield here of, and this is $4.24, okay, which is not as important as this percentage. Okay. This percentage is 2.22%. What that's telling you is this investment, if you invest in Clorox, and this is whether you buy 1 share, 10 shares, 100 shares, 1,000 shares, you're going to earn on average 2.22%. So about what you would earn with a good CD. Well, 2 things. That's what you're going to get back in cash, right? So 2.22%. Plus, you can also possibly benefit from Clorox going from 189 to 220, right? So then you can earn 2.22% and then go sell it and take the profit. Okay? Whereas with the CD, you're getting your 2.22% and that's it. But you're locking in that rate. Questions?
I have a question. What is the after hours change on the stock? What does that mean?
So this is, so after the market closes, and don't ask me how, but after the market closes, people are still putting in bids and they're setting themselves up for the next day. And so what this is looking at is, what are people asking for, right? People are saying, hey, I want to sell tomorrow. Someone says, I want to buy tomorrow. And if more people want to buy tomorrow than those who want to sell, that 189 is saying, okay, well, I'll pay you 190 for it. I'll pay you 190 and a quarter for it, right? So that's what that's keeping track of. Other questions?
Yeah, you mentioned that you could get something fixed when you with your, I think you have to do with your earnings rate, right? You said you lock yourself in.
You lock yourself in. Say that again.
Lock yourself in, and was that? I think that. What was that in reference?
Do me a favor and type it in the chat. I'm having a hard time hearing you, and I don't know if it's your connection or mine. I know my internet keeps telling me
I mean,
it's unstable.
It's just basically, I think you heard. They get locked into something, but what is that something?
Getting locked into something?
Yeah. that it's like consciously can do as you invest.
I'm not following the question. Type it in the chat as best you can, and I'll address it. I'm going to jump real quick to another company we're all familiar with, Alphabet. You guys are all familiar with Alphabet? Yes? Yes, Alphabet is Google. So I'm going to even do it wrong and type in Google. And it's going to tell me, do you mean Alphabet? Oh, not sure what I just did there. AU2 Bioscience. Okay, no, that's not the app. Look at Google. So Google, right here, Alphabet. Can you guys still see my screen?
Yeah.
So now let's just look at Google, and so Google is trading at 1. So if you said I want to invest $5,000 in Google, that would buy you 3 shares. Versus if you invested $5,000 in Clorox, that would have bought you about 26 shares. And you can see it's down today, about 0.25%. But let's just jump over here to their beta, 1.05. So this is above that 1%. So Google is moving more rapidly than, more rapidly than the stock market taken as a whole. Okay, because it's above the 1%. You know, remember 15 is, anything under 15 is a good buy, and they're at 26. Clorox is at 29. So they're a little bit better than Clorox, but they're still high. Right? Their earnings per share, $49. And the reason why it's so much higher is because they have less shares outstanding. And then here, I want you to see this, dividend, and they say not applicable. I picked Google because Google has never paid out dividends. So if you're investing in Google, the only thing you're banking on really is that over the next 5 years or year or 3 months, however long you want to invest, 10 years, that it's going to be worth more than $1,275.88. Because right now they don't have any plans to pay out dividends, or you're banking on the fact that they're going to start paying out dividends at some point. But they don't pay out. Dividends. Questions?
Professor, there's a 1-year target estimate, I think. Is the number is important for the stock or not?
This is, so on average, right? So there's people who, remember I talked about, we're in class, why I don't like to invest in individual stocks, because while I'm keeping track of this, there are people whose full-time job, 40 hours a week, is to track how Google is doing and project what they think the price is going to be. So this number here represents a estimate of a number of different analysts who think that the number is going to be $1,500 in a year from now. But again, that's just guessing. So I don't really put a whole lot of, well, I don't invest in individual stocks for real. But I don't put a whole lot of faith and trust in that number. It is good to see that it's projected to go up on average versus projected to go down on average. If it was 1,200, then people would be like, well, I should start selling.
Okay, got it. Thank you.
You're welcome. All right, let's see. Well, I can't take any more questions because we're out of time. Golly, man. All right, so we'll pick this up on Wednesday. I love talking about this stuff. This is stuff I wanted to talk about. So keep asking questions. Brian, I think that was you asking a question, so stay on the line, and I will